Welcome to A Canadian Investing in the US, a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of A Canadian Investing in the US. This week, my guest is Brian Bernal. Before we get Brian to give an intro, before I ask him a bunch of questions, we're going to be talking about like currencies and currency exchange rates. And well, I have a feeling we're going to go down the path of talking about a little bit of where we think this is going in 2023. But we are just two guys, I'm just trying to say this as a liability thing. Anything we say here, it's just, we are not economists. At least I'm not. We're giving what we think, some things, and I think anyone who does say that they definitely know what's happening in the future, they don't. Right? I think that there's a lot of uncertainty. There's a lot of different elements, and there's all these new things that can come in to apply to this. But we're just going to talk about kind of where we think this could go and what we the pressures we're seeing to go through this. So I just want to put that disclaimer out before we do anything else. So do not hold either of us liable. This is just a couple guys, and Brian's right in the industry, but it's a couple guys. They're just chatting about what we think is going to go. So anyway, sorry about that, Brian, but maybe we'll give people a bit of an intro to yourself, and then we'll go into some of this.
Yeah, so that's great. I'm very pleased to be on with you. So yeah, I'm Brian Bernal. I'm the Director of Business Development at Currencies Direct. A bit about myself: I've been in the financial services sector my entire career out of college. I've been in the foreign exchange and international payment space for about 10 years now. Really, when fintech really took off, it was a space that's grown tremendously with cross-border payments or individual clients or businesses looking to send money around the world. Prior to that, I was involved in financial markets at some of the big houses, dealing with portfolio management, things like that, investments in securities, stocks, bonds, things like that. So I've had a career in this, and I'm very glad that you've mentioned about not holding anyone too accountable. I typically, Glenn, don't like to use the word prediction because when you use the word prediction, you totally it's a definitive word. You definitely have the chance of being totally wrong.
So strike that. Anyone who heard that, just forget that ever happened.
No, I mean, moreover, in this space, we like to use words like forecasts or projections. It leaves a little bit of room in there to be wrong, and that's effectively what we're looking to do is kind of measure and weigh probabilities more than anything else. What can happen, what may happen, what to kind of look out for, and ideally get an outcome that we're pleased with or that we can at least tolerate. That's primarily it. But yeah, pretty volatile year this past year. I cover a gambit of currencies. Our organization, we deal a lot with all currency pairs and different crosses, and on this particular one, it's obviously the Canadian dollar to US dollar. Historically, the Canadian dollar, compared to a lot of the other ones, really isn't that volatile. It is, and each cent is precious when you're moving large amounts of money for property purchases and things like that. But in the last year, in 2022, we saw a range of about 11%, meaning from the highest point to the lowest point of the Canadian dollar to the US dollar.
Does that mean that the American dollar is doing more of the movement?
Within that currency pair, there was 11% from peak to trough.
Okay.
So and it's really an interesting topic of chicken and the egg, what's wagging the other, and a lot will debate on what what might be pushing the other in another direction. But at the end of the day, we like to feel or think it's market participants that are actually creating that true, real price. I'll get into that a little bit later, but 11%, if it was the prior year. Since 2016, we've had them from peak to trough about 17%. So
That's not so bad, really. I always think of it being much higher, but it really isn't that different.
No, it isn't. It isn't really, and there's a few factors for that. I mean, compared to some of its counterparts, let's just say like the euro US dollar or the pound US dollar. I mean, this past year we've seen volatility of 25+% in those currency pairs against the dollar. So the Canadian dollar, out of all of the other peers in relation to the US dollar, has been the strongest. The yen those numbers are ridiculous on the kind of peak to trough in 2022. It's hung in there quite a bit, and I really think it's been more or less its commodity mix that it has. There's an inverse relationship with the dollar and oil and commodities, and the Canadian dollar is really a commodity-based currency, so it kind of holds it. A lot of the volatility is less than some of the other currencies, but yeah, so the past year, roughly 11% volatility. We're looking at pretty much the same for 2023. I mean, I'll just go out there and let everyone know our forecasts.
Yeah.
We're looking probably about the same 11 to 12% volatility next year. A bit on the higher end of the best way to explain this, of the range will be in a little bit different range, more in favor of the Canadian dollar. We've seen the US dollar this past year do some amazing things that no one could really forecast. And the fact that the Canadian dollar is held in there so strong means that once that tide starts to turn, we'll see the Canadian dollar outperform. What are some of the factors that are going to lead to that? In this kind of, what I'll say is the central bank intervention era, if you want to call it that. That's what I'm kind of coining it. Pretty much since 2008, you've seen a lot of central bank intervention moving things around. A lot of the other numbers don't make a lot of sense, whether you're talking about their GDP numbers or their debt levels, et cetera. I mean, they're all in pretty precarious positions, to be fair. So what's really moving these things around is central bank policy, and the Federal Reserve, just as the Central Bank of Canada, are in a similar position. They've got really high inflation that they don't like. They're doing everything they can to kind of tame it, which is steadily raising rates to historic levels, at least the pace of those rate hikes. And that's probably going to continue for a bit. We're looking at around the end of Q1 to potentially throughout Q2 for a bit of a pause, or maybe a dampening or a dovish more tone, as they say, from the Federal Reserve in the US. I don't know why. You could probably pick any headline out there to put in place of why. There's a lot of things around the world happening, from wars to potential anything really. Whatever the why is going to be, they'll tell you when they want to tell you. But there'll be it looks like there's going to be a switch probably towards the end of Q1, maybe Q2, where the Fed will start to weaken. And I would definitely we pay very close attention to the Federal Reserve and their actions, simply because they tend, in this central bank intervention era, they tend to act first, and a lot of the other central banks will typically follow. And I can give you, a couple examples of that.
Sure.
In, let's say March. This year, the Federal Reserve started raising rates in March of 2022 at a pretty astronomical pace.
Yep.
The Bank of Canada didn't really start till June. And it wasn't just the Bank of Canada, it's the European Central Bank. It's almost like in this era, the Fed kind of leads what's going to their posture, and a lot of the other central banks follow. Another example is before the pandemic in 2022, the Federal Reserve was the first to cut rates dramatically. And then months later, a lot of the other central banks started to follow. So once the Federal Reserve in the States looks to, I guess, pivot is the term that everyone's using, or change their policy a bit, you'll see the Canadian dollar really outperform against the US dollar. And if you can couple that with weakening home prices within the U.S., which we're already seeing. It's very clear. We're seeing that. I mean, that's really
No one can
the
afford them.
that's the mother's milk of Canadian investing in real estate. If you can get a weakening U.S. dollar as well as a weakening real estate market in the U.S., it has a lot of good opportunities for some entry points for sure.
So if I had a bunch of American money, it'd probably make sense to bring it back sooner than later. And if I had a bunch of Canadian money, it should, likely get to be a better exchange rate. I wouldn't recommend anyone listening to this to base your purchases based on that. But if you had a chunk of cash you were sitting on, that's when it would go. I wouldn't go, I'm not going to move my money or buy houses until it gets lower. But anyway, it is a factor, right?
Absolutely. There is. So with that being said, I definitely agree with you. There's a few components that you're involved with. Obviously, a lot more that goes into actually gearing up to do something like that. And there will be, an 11% range, let's say next year, 11-12% range. If you can get some, US dollars at some of the better levels, then absolutely. But yeah, overall, that's our forecast. We're looking for more purchasing power from Canadians, throughout next year. It'll be a volatile year, but it looks like the large move in the U.S. dollar is beginning to exhaust itself already.
What about elections? How did, like in the past, what has that done? Do we usually see which dollar is going to usually get more aggressive during those periods? When I started investing in the US, I did it by myself and had to go through the growing pains of doing that. GlennSutherland.com/coaching. A 12-week coaching program done 1 hour per week over Zoom from the comfort of your own home. Classes are kept to 5 people to be able to answer everyone's questions. Shortcut the process. Make fewer mistakes. Curriculum available at GlennSutherland.com/coaching.
Usually the US dollar weakens during those periods.
Okay.
You have, and it doesn't matter. I pay less attention to elections because a lot of the movements are kind of happening not necessarily based on elections. But what you do tend to get when in any type of election or when candidates are running is they want to spend a lot of money and promise a lot of things and do a lot of what perceived good, and they need a lot of capital to do so. And typically that comes with money printing, et cetera, to be able to fund some of those projects and whatnot, which typically tends to weaken the currency. So from the U.S. perspective, I know it's going to be a lot of talk for the race that's going to be taking place. There'll be a lot of promises on what they want to do, et cetera, and a weakening. It tends to weaken more than strengthen.
Gotcha.
Something we don't really pay a whole lot of attention to, but historically, yes. But lately, like I said, a lot of it's been around just central bank intervention more than anything else, more than elections.
Yeah. What's running through my head is I'm like, I really should have moved all my money back to Canada when it was at 139 or 1.39. Yeah. That sounds like that was probably the best we're gonna, anticipating that getting back to that spot again, eh?
It may. That's going to be within the range. So typically, I mean, the ranges that we have for next year, and I have it done inversely, 0.8405 to 0.7070. Let me see if I can quickly invert that for you. It would probably equate to just over 140.
Okay.
There will be opportunities next year with the volatility. You'll see both sides from where it currently sits, where it will be weaker and it will be stronger within that 11% range.
Yeah. Because there's so many factors that go into this, right? Like you were talking about just how much, if Canadians are spending a lot of money in the US, it could affect this dollar, right? If we're going and buying houses down there because our stuff's too expensive, that, it could have an effect, right?
Yeah, absolutely. It could absolutely affect. A lot of it also is a lot of money is just looking for yield. who's paying the highest yield. If the Federal Reserve starts to weaken, as they've already kind of mentioned, they may slow some of the rate hikes. Money is searching for yield. And if the 10-year Treasury is not yielding the highest, a lot of money won't flow to it, and will weaken. But yeah, I think the main thing I really wanted to get across was we're going to have another volatile year in 2023. There will be opportunities to where I think both sides will win, whether one wanted to bring funds back into Canada or one wanted to depart with funds into the US for investment. There'll be opportunities to be able to capture within the year for sure.
Awesome. So you work for Currencies Direct. We haven't had Currencies Direct on the podcast before. What is Currencies Direct? Let's talk about a little bit what some of the what you guys can do for the listeners, or what your products are, what the advantages are. Like, just talk about Currencies Direct.
Yeah, of course. So Currencies Direct, I mean, really came about from offering services that banks don't provide for foreign exchange. We offer fantastic rates of exchange. Bank beating rates. Some of the products that our customers really enjoy is just a lot of market guidance on what the market's currently doing, what it may be doing. So for example, if you're a Canadian customer and you're under contract on a property in the US and you have, let's say, 30 days to close, well, what's going to happen in that 30-day period? When should I convert? Should I convert now my Canadian dollars into US dollars? Should I wait? Should I stall for a bit until closer to my closing date? So kind of looking at and guiding customers.
How would that look? Is it going to be like you have like a forum or a portal or something to kind of get that information, like some written articles, or you actually going to have like a one-on-one conversation? Because it seems like it's going to be tough to do all those one-on-one conversations.
Yeah, I'll tell you, we have one-on-one conversations.
Really? Okay, that's good.
So,
people love that.
So yeah, we have we've got about 700 employees scattered around the globe in various regions, where I sit in the US in our office in Florida. But I think that's one of the things that really sets us apart. We still employ humans to have conversations.
That's awesome.
about that. Although customers can also self-service online. We've got a great online platform and an app where they can convert currency and send payments to wherever they would need to go. But
can we talk about the process a little bit? Because is it if we're sending money to you, can you pull from bank accounts? Is it wires? How do they do these transactions?
Yeah, so what a customer would do is they would have an account set up with Currencies Direct. Very easy to do so. A Canadian customer, all of our banking in Canada is done with BMO. So it would be a domestic transfer to if you wanted to fund your Currencies Direct account, it would be a domestic transfer within Canada. Okay. And then we can make any currency conversions that you'd like. And we can send funds to really wherever they need to go. So we can send funds to a third party. So to, let's say, a title company for a property closing, or to a lawyer who's involved with a property dealing or something. The funds don't have to go to a US bank account in the customer's name. So it's a very simple process to get funds from point A to point B. And like I said, you can speak to us at any time on any currency pair that you're looking at, or if you want any insight on what the US dollar Canadian dollar is doing. But to answer your question, to answer your question, it's opening an account and funding it is domestically, within Canada. Speed is very important to us, and maximizing customers' transfers within the foreign exchange market is what we do. We do have a few other products where we can target a rate for a customer. Yep. So let's say, right now the US dollar Canadian dollar is at 136.06. Let's say a customer wants to achieve 132, and because that's what they've budgeted for, or that's what we'd like to see. We can put an order out there for the customer that when that rate hits, we can automatically purchase the currency for them, so they don't have to watch the currency market every single day.
Oh, that's awesome. I didn't know that was a thing.
Yeah, so there's two types. That's called a limit order, where it's firm. Yep. Where at any time of the day, if that rate were to get hit, it would automatically convert for that customer. Or we can do what's known as a watch order, where an automated email will go out saying, the level that you're looking at is currently available. And then we can have an additional conversation at that time. You know what, it looks like I might get a little bit better. I know you don't need funds for, let's say, the next 10 days. Why don't we give it a day or two before we convert and see if that, so those types of conversations that banks aren't offering to clients with foreign exchange needs.
No, that's great, because I didn't know that the exchange companies, I know I've done that with like stocks and stuff, but I didn't know that you could do that with a foreign exchange company. That's incredible. One thing I heard from some other foreign exchange companies that they were having trouble with, which I don't know if this is a thing at all with you guys, is they're having trouble like taking it, say, from Glenn Sutherland in Canada and putting it into a corporation in the United States, like that maybe I own or I'm part of, right? Do you see any snags with that?
That's a really good question. And the way that we do it, however you were to open a currencies direct account, which again, you don't have to fund the account. It's just a platform to take advantage of our exchange rates, really, and have multi-currency accounts should you wish. We would just need to receive or have funds come from Glenn Sutherland. Okay. We can send funds to wherever you would want to go without any questions. You couldn't have an account open in some other name and then start funding it from Glenn Sutherland.
Okay. Yep.
If that makes sense. So a third-party payment on the outside to, let's say, your business is perfectly fine. The funds just need to originate from an account in the same name that the account is set up with at Currencies Direct.
And for anyone who's just like, if that went over your head, you can do all this stuff, but what often is the easiest way is if you have a personal account in the US, like for me, bringing money back, and you have a corporation in the US or an LP or C Corp, whatever you're using, is to do your dividend in the US and pull it back. Or you could run that right through the whole thing, which is a little bit more complicated if you're running it back to your Canadian holdco, and you could run it through that and then pull it out. Or if you're taking it from your C Corp or your LP in the US and then bringing it back to your personal name, is even more complicated. But if it doesn't matter to you, or honestly, I'd talk to your CPA. Then a lot of times I'll do my dividend in the US and then send it back personal to personal, and then it's a lot easier, and I found it faster.
Okay.
Anyway, cool. For in the show notes, if anyone's wondering, Currency Direct website, I'm going to put in, I have an affiliate link with them, so they'll have my link there too. If you guys are looking for that, I will put that in there for you. Brian, is there anything else I should have asked you during this interview? Anything else you wanted to touch on?
I think we've pretty much covered it off. The main thing, I guess just some of the takeaways is we're looking for a stronger Canadian dollar here soon. It's already happening, actually. The market's pretty much sniffing out that the Fed might get a little vulnerable here shortly in terms of the pace of which it's raising rates. The market's already sniffing that out, and that would probably be one of the main takeaways. And then, of course, anyone that has any questions, you can reach me via Glenn's link. And I'm happy to help however possible, for sure.
Sure. And if you want to, I can even put your email address in the show notes or whatever you prefer. But Brian, thank you for coming on the show. I think there was a lot of value there. Even for myself, I was taking notes down because I like to keep chunks of money on both sides for, be safe money or whatever you want to call that money. But times I like to move it back and forth just to, for life, or to take advantage of the dollar at different times. So I think there's a lot of takeaways for me, even for planning my money movement throughout the year.
Well, good. Yeah.
So yeah, thank you for coming on the show. I really do appreciate it. I think there's a lot of value there.
Yeah, thank you so much, Glenn. I greatly appreciate it.